11% and 13% yields backed by Morgan Stanley and Blackstone. But are they actually safe? Today, we're exposing the risks of my two newest high-yield stocks. Welcome back everyone, I'm the Swedish dividend investor. It's time for an update for my case study high-yield portfolio. I have been quite busy as of lately. Summertime is high season for me, but the transfer has officially started and in a couple of weeks I will hopefully have the entire portfolio ready on IBKR. The project will continue for those who are interested. I like the possibility of buying fractional shares on IBKR, and I even have automatic reinvestment, so there is always the possibility we can do that. But I do think it's more fun to pick where I invest. Let me know what you think. As always, this is not financial advice. I'm just sharing my investment journey, my experiences and my own analysis. Read the full disclaimer in the video description. Alright, so let's get down to business. I bought two new holdings in February of 2026, but I haven't gotten around to do a deeper dive into the holdings. So for today, you will get a 2-for-1 special. Let's kick things off with Morgan Stanley Direct Lending Fund, ticker MSDL. Some quick info. They are currently trading at a price of about $15.5, give or take, and their current dividend is $1.8, giving them a current yield of 11.61%. They pay quarterly in January, April, July and October. They have a market cap of $1.3 billion. So, MSDL is a business development company. It aims to generate attractive risk-adjusted returns, primarily through current income, by directly lending to US middle market companies. It focuses heavily on senior secured first-lien term loans, which sit at the top of a company's capital structure for safety, and typically targets non-cyclical, stable industries backed by private equity sponsors. Let's take a look at their latest earnings presentation to check their numbers and portfolio. So, their portfolio consists of 93.8% first-lien investment. First-lien debt is a type of secured debt, where the lender has the highest priority claim to a borrower's specific assets if they default on the loan. This means that if a borrower fails to repay the debt, the first lien holder has the right to seize and sell the pledge collateral, like a house or a business asset, to recoup their losses ahead of any other creditors. This priority makes first lien debt a relatively lower risk investment for lenders. They are invested into 36 industries with 227 borrowers. According to MSDL, they have a 95% non-cyclical exposure. Non-cyclical meaning restaurants, retail, energy and other businesses the advisor believes may be subject to cycle volatility. We can see a pretty massive chunk into software at 20.7%, insurance at 10.1%, IT services 9.9%, and just pause if you want to read the rest. Their leverage is 1.22 times net debt to equity, and the average for BDCs is 1.01 times. This has gone up from 1.07 times in Q1 of 2025. Their non-accrual rate is 1.5%. This is how much of their debt they don't get interest on. The average for BDCs are 1.3 to 1.5%, so around the average. Their interest coverage is 1.7 times. The average is around 1.18 times. So let's take a look at their dividend. When I first decided I wanted to buy MSDL, I had my suspicion that they could cut their dividend, and I got it right. They lowered it from $2 to $1.8. To see how well they covered their dividend, let's take a look at their NII, net investment income. This is what pays the dividend. At the end of the first quarter, their NII was $0.47, while the dividend was $0.45. So their coverage is 104.44%. So they are really balancing on the edge here. If we check their numbers, The NII has come down from $0.52 as of Q1 2025. So, why do I like MSDL? First off, they are backed by Morgan Stanley, but secondly, they are also trading at a discount to net asset value per share. Their NAV per share is $19.81, while they are trading for around $15.5. That's a 21% discount. Now, my portfolio is somewhat diversified, so I'm not putting all my eggs into this basket, but I think they can do okay over time. So let's go through the next one, and after that, we will compare them against the S&P to see how they're currently doing. A quick break from our sponsor, you guys. Did you know? An easy and free way to support the channel is to like the video, drop a comment, and if you haven't already, subscribe and hit the notification bell so you don't miss any of my videos. Thanks. Blackstone Secured Lending Fund, ticker BXSL. Let's do the quick info. They are trading at a price of around $23.5. Their annual dividend is currently $3.08, making the current yield 13.10%. They also pay quarterly in January, April, July, and October. Their market cap is $5.54 billion. Blackstone Secured Lending Fund is a large publicly traded business development company, the world's largest alternative asset manager. They act as a private lender, providing debt financing to established mid to large-sized private companies in the US, usually backed by private equity. So let's take a look at their latest earnings presentation. Their portfolio consists of 97.6% first-lien debt, 1.6% second-lien debt, 0.7% equity, and 0.1% unsecured debt. We can see a bit different portfolio, still above 20% into software, but we do have 10% professional services, 10% healthcare providers and services, 9% insurance, 8% commercial services and supplies, and just pause if you want to read further. They have 306 portfolio companies. Their debt to equity is 1.32 times, so above the average. It is up from 1.16 times a year ago. Their non-accrual rate is at 3.1%, and that's pretty big. That is up from 0.3% a year ago, so that's definitely something we need to check going forward. Unfortunately, they don't have their portfolio companies' interest coverage listed, so let's check the dividend health. They just about cover it. NII of $0.77 per share and a $0.77 per share quarterly dividend. I do expect them to cut the dividend quite a bit. Just like MSDL, I had in my mind they will cut it down to $2.4. Maybe it will be a bit less or a bit more. Expect the worst. If they cut their dividend to $2.4, that would be a current yield of 10.21%, which is still decent. Their NII Q1 2025 was $0.83, quite a lot better coverage. We also need to see the net asset value. It is currently sitting at $26.26, giving us a discount of 10.5% to net asset value. BDCs have been pressed for some time now. Some raised their dividend when the rates increased, others have been more conservative. In the long run, I think these will do fine, but there will be a lot of uncertainty going forward. Why did I buy BXSL? Mostly because of their high yield. I've gone over this before, but BDCs has to distribute 90% of their taxable earnings, so even if they lower their dividend, it isn't the end of the world. In BXSL's case, going from 13% to 10% yield is still a very high yield, and I don't think all BDCs will go bust if there was a risk of a systemic failure, and this portfolio only represents less than 10% of my whole portfolio. So I'm not that worried. So to summarize, I've put together a slide where we can see their important numbers and the average for the BDC sector. BXSL's 3.1% non-accrual rate is something to keep in mind, and I don't like they didn't list their borrower interest coverage. I do like BXSL's very high current yield, but the discount and dividend coverage isn't what I would like to see. As for now, MSDL looks a lot better on paper, even though they are pushing it with their dividend coverage. Alright, so let's stack them up against the S&P 500. MSDL since inception. Ouch. Negative 1.43%. It is a pretty young BDC, and dividend can take some time to stack up, which is where a lot of the total returns come from when investing in BDCs. BXSL since inception. Looking a lot better. 41.08%. Still not beating the S&P 500. But, to be honest, do we really think they will beat the S&P over a long time? Some do, but I would say that's a bonus. We invest in BDCs for the income, not to beat the market. So my total investments into MSDL and BXSL for now is 104 shares of MSDL for a total of $1,606 and 70.83 shares of BXSL for a total of $1,743. BXSL currently pays me $218.16 per year, while MSDL pays me $187.20. That's $46.36 after taxes each quarter from BXSL and $39.78 after taxes each quarter from MSDL. Alright guys, I hope you enjoyed this short breakdown of my newest positions. I am a bit late, like I said. What do you think about MSDL and BXSL? Are they too risky right now? Let me know what you think about them. Thanks for watching. I will see you guys in the next one. Until then, stay smart, stay patient, and keep stacking those dividends. Ha det gött!